All right, good morning. Bruce here at Targeted Wealth Creation coming at you, peoples. BITO and YBIT, what happened on Wednesday the 25th? Well, we were down 1.67% in BITO, our underlying, and we were only down 0.28. Yay! In YBIT, 1754, just down 5 cents. So what did they do? Did we have inflows, outflows? Well, actually, we had an outflow. We had 100,000 shares cashed out. So when that happens, peoples, you see the negative 2.3 in cash. So what they do is they liquidate, right? They don't want to draw down their treasury or their cash position. So they simply just sell some things that they already own. So they took 400 contracts off the 25 for 3 cents. So I just call that an early roll right out. They got out of that position. And so they kept 98, 99% of the cash. If you look up here, that was 5 1/4 that they sold at 44 cents. So you put the item down here and you showed the 3 cents. So I took away the 525 and it's only 125 remaining in that position. But look where it is, guys. It's 25 strike price. We're trading at 22.93. So that's like a 13 or 14%. That is 9% out of the money. Because there are remaining 10,375. So we look pretty good with 2 trading days on that. Like I said, I think we're bouncing along. There may be, to me, it's filling out a small little bear flag, and we could make our run down to 52, and then hopefully this decline is over with. And it may not do that. Again, that's just probabilities that I see in the chart. You know, unless we really go up to 69 or 70, if we just bump up 61, 62, you know, higher highs and lower lows, just kind of, you know, it forms an exact bull flag upside down. You have the big drop, the flag is pointing down, and the pole, and then the flag is flying upward to the right, and then it just drops, right? So there's a preponderance of evidence that may be the case, but can it do other? Of course. It could take off and run and break out above resistance. Okay, so what did we do besides that? So let me show you the synthetic, because we did a whole matching pair, right? We took 400 calls out that were a move that was going to happen later this week. Why not buy something that's only 3 pennies that you sold for a lot more money? So let's go look at the 35s. Now in this situation, it costs us a little bit of money, because here's where we put the 525 on, right, back on 619. So we bought calls for 8 cents and sold puts for 1306. So we took 400 of those 525 off the table. So we were able to. So what you do in this situation is you sell your call and you buy back the put, the exact opposite. That's why we have a negative over here. So that costs us about 525,000, right? Not a lot when we look at the overall fund. So we see here, and so when we take both of those, which are taking away a little bit of our cash, that's all it is a little bit of our cash. So let's go over holdings a little bit more detailed to see how we're doing. So there's the new share count, right? 2,175,000 instead of 2,200,000. So that was a minus 4.4. But just the other day, we jumped from 2,175,000 to 2,275,000, from 1 to 2, right? So 2,000,001 to 2,002,000, and both of them had 75,000 on it. So we just exchanged, right? Added those shares and then took them away because it's scaring people. Nobody likes volatility, you know, as much as if you're buying BTC, guys, you're buying one of the most volatile assets in the world. You all know how high it can go, and you all know how low it can go. So if you're not ready for volatility, don't own these. But these are some of the best performing assets. I mean, all you got to do is look at Coney and Misty, right? And again, if you chase it and you buy Misty at 39, you're dying when it's 28 or 29, right? And even Bitto, you know, I bought some Bitto at $30, I think, you know, a couple hundred shares, just because I thought, oh, I can ride direct BTC and I can get dividends. And the dividends were small then. The dividends are up competing with YBIT, right? But Bitto hasn't done much since I bought it, because mainly Bitcoin, you know, was near a high then. But I'm bullish enough long term. I'm not worried about the short term. Just like in YBIT, I own a fair amount of YBIT. You know, 17, 16 doesn't bother me. I mean, in order for it to do a Tesla and go down a reverse split and all of this fear stuff, then Bitcoin's got to go in the dirt, right? Bitcoin's got to go back, BTC's got to go back to 20. And you got to live like that for 6 or 8 or 9 months or a year and just say, hey, I was wrong, right? Well, I'd be out of it before then. But the idea is, you know, you can always have a bullish bet and be wrong. It's what do you do with that when you recognize that you were wrong? So anyway, not to go on my rants, peoples. All right, so we look pretty good, though, because we're below all of our strike prices, right? Yesterday, I think we had closed the day before at 23.25. So this was 60 cents. Now it's 29 cents, right? So we went from being 100% behind to 17% in the money. So, I mean, we look pretty good at 687 written calls. We could buy them, the remaining ones, right? I took out the 400. This was 10,775 before. So we've captured 80% with 2 days to go. And really the only vulnerability is on the 23s. And that's 1,000 out of 16,000, almost 17,000. So that's minuscule. Looks like we're going to win everything, right? Which this fund, even though they're gaining their money by writing these 35s and we're down at 24, it's still money in the piggy bank. It's just, I don't think they're going to pay us $3, which they could because they got that big liability. And you know what? It's not fiscal prudence to do so. So those guys that, you know, somebody in the thread said to me, well, Jay said they're always going to pay out. Total different what he was talking about. What he's talking about is when they capture income, particularly on the short call income, right? If they have it in the bank, they're going to give it to you. And the other thing he was referring to is the taxation issue. So the way these funds are all structured, and it's true for anybody, right? Bitto has the same issue. It's true for these single stock funds and multi-stock. When you set these funds up, you're required by tax law that you distribute 90% of all the money you earn. Well, remember, they're going to have to roll this 35. So they may look like they have a lot of money now, but when they roll it, it all depends. If Bitto flies up and goes to 38, then man, they're really in the money, right? But if it doesn't, they got to lose money when they roll it, and then they'll write another one that gives them money. So that bit about that they're going to pay it all out. Yes, for their fiscal year end, they must pay 90% or pay tax, and no fund is going to choose to pay tax. But those are end of year decisions to clean up what they've done all along. And those have a benefit for us as shareholders because right now, all these distributions fall into the category of ordinary income, right? And I got a video coming out on how to structure your tax affairs and all that. It's complicated, but I'm working on that, which can be important if you're a big hitter and you're pulling in 20, 30, 40, 50,000 and it's not in a taxable, right, in a tax-free, in a Roth or an IRA. So You got to be aware of that to help yourself out. And there's some ways to structure your affairs with some LLCs, some S Corps, even a C Corp, and I won't get into it here. But my point is, they call those things ROCs, return of capital. Not that the negative Nellies out there on YieldMax say, oh, well, those funds are a scam. All they're doing is giving you your money back and calling it a big distribution. Why do they even allow that? That shouldn't be legal. Well, that's not true, okay? The return of capital at the end of the year is they catch up. What if right now the fiscal year was prior to 8/2 and they had collected all this money, but they had this paper loss? So basically they're going mark to mark. They're catching up on accounting, and if they collected it, even though they have a liability, they have to pay it. That's a different deal than right now, folks. If you don't understand, right? It's complex, it's accounting, but that return of capital, the portion, right? The whole payout's never going to be probably ROC. There's going to be a portion, and in the ETF, if you go out and look at YieldMax, you'll see some prior Tesla and some other longer term funds that have gone through the fiscal closing year. And again, I can't remember if it's September or October for YieldMax, but it's around that time frame. It's not the calendar year to my best memory. And what they do is they pay you a portion of your distribution as return of capital, ROC. So why is it that you're not taxed? Because it's not considered a distribution, it's considered a return of capital, and you'll get a 1099 only for the income distribution portion, but on the other, it will have lowered your cost basis. But if you hold that fund for a year and you're in a lower tax bracket, then you added to your profit, but that's fine if you're in long-term capital gain. So basically, if I bought one of these funds for $18 and the fund's at 24 and they're going to pay me 50 cents worth of ROC, then my cost isn't 18 anymore. That amount of share cost drops to 17.50. So the difference between what I ultimately sell it and my cost of the acquisition gets lowered by 50 cents, not 50%. Okay, guys, I hate to, but people ask me these questions and they misuse return of capital, right? And they usually mean it in a negative way. They're talking about YieldMax is a scam and Defiance is a scam and, there's other ones out there, and they're really not, right? No one goes into business with the idea that they're going to scam. You may have an individual that does that, but nobody's going to have partners in that in a big, broad appeal, right? The SEC is going to weed that out. Okay, so let's move forward. This is all our holdings. This shows us, let me show you a couple things down here. So again, we're hovering, because we didn't move that much, we're hovering around 22, right? So that's our liability. That's what I'm pointing out to you, that they have a paper loss. Now they have till August 2nd to clean that up. And they could, they may not. It may stay the same and they have to roll it. And, there's methods for them to regain monies. It's not like all negative by any means. I don't worry when it's an 8.2, but I'm trying to tell you why they're not going to go pay us $6 right now just because they've collected it. All right, so let's go look. So fair value is 1754. They're saying this time net assets are still 1782. So that's a bargain when you add up the share count, right? And these got much better. These popped up to 80%. So let's go look at the key. I showed you the weeklies, right? So this is 467. This is the guy that's tight, right? 31. This is the one that I thought was 10, 11, 12, and it's 9, but that's significant with 2 days. There's our 79. Again, on 628, we've captured 80% of our 687,000 they've already given us. All right, and you see implied volatility is actually down, right? Because BITO is just kind of declining, but not really. It did have a pretty good bounce up for the day. chart still says to me it's a bull flag, right? There's your pole, there's your long flag. How long this thing stays in this channel? If it doesn't break a top or go below a bottom, then it's still really considered a bull flag. And as I said to you, it would have to break 19 and a half, right? But if we go to 52, that's probably where it's going. It's probably going in that 20 neighborhood. If it bounces off of that, that's fine, right? If you didn't own any and you saw it there, it's probably a great time to buy. Am I saying it's going there? I don't know. I really don't. It's still kind of in the middle of the channel at the moment. Okay, guys, let's do payout. Not a lot changed, right? This went down. So what do we have in this fund to pay out? Well, just based on this month, we've piggy banked $8.16. They're not going to pay us $4. They're not going to pay us $3. In my opinion, again, you know, anybody that tells you they know what they're going to pay is lying. You know, anybody that says this is an educated guess, but that's all it is. So what they did to me last time when I saw this much money and I said, hey, I think it could be 250 plus, but it's looking pretty good. Maybe they want this fund to be competitive with BITO and all these other longer and larger, you know, BTC-oriented ETFs. They came in at 137. But guys, that was an 81% yield. Now, the fund's gone from 19 to 17, right? We're trading at 1754. It actually touched 1691 on the close the other day when Bitcoin got slammed. So I'm conservatively now going out and saying they're going to pay us $1.21 because they're going to come at this yield, right? They're going to come and pay another yield similar. Now, if they want to be aggressive and make it $1.50 or $1.60 and send this up, you know, high, that's up to the management, right? But fiscal prudence says this is a sub $2 payment, right? And you're going to make people happy here in this range. They're going to continue to buy the fund that are believers, guys. Don't chase yield. How many people FOMO'd into NVIDIA? You know, when NVIDIA hits 97 or 100, how many of you guys that FOMO'd in and didn't get all that yield increase and didn't get all that benefit is going to be crying foul and they're blaming it all on YieldMax? Try blaming it on yourself. Try taking responsibility for when, and I'm not even saying it's going there. That's about major resistance. You know, I also think it could see 160 in September if you want to talk about things. But that kind of volatility happens, right? So if it's 100, the guy that bought in when it was 135 or 140 and bought NVIDIA is probably dumping it, going, oh man, they're killing me. And then it'll turn around and go to 160. But do I think most of the upside's gone now? Yeah, I do. Is it a great company? Absolutely. But is it closer to a top than it is a bottom? Absolutely. Especially when it's at its all-time high. So just be aware, right? Don't go all in at any price. So just realize these are volatile underlying assets, right? Okay, sorry to just harp. And right now, BTC-oriented funds, Coney, Misty, YBIT, all three of them, they're trading along with the FOMO in the triple Qs. Look at it, right? One goes down, they both go down. That really probably shouldn't be because they're completely different assets, but that's how the market is viewing them right now, and that's how they're getting categorized. That will change over time. So anyway, that's what I got. Sorry about the rant, but you know me, I got to do it sometimes. So $1.21 could be $1.50. You know, we'll see. They got the cash, but they also got the liability. They got 22 million, right? They're sitting on 16 million this month, but they got a $22 million paper loss. And it's real right now, but they got till 8/2. So if you're them, how would you handle your money, right? So it's just fiscal prudence. And that's a heck of a yield. I'm happy with it. Okay, guys, not financial advice. I'm not a financial advisor. Have a good one. Bruce out. Bye.